That is your stock or crypto chart. So this is a month chart that we're looking at right here. What the dumb people do, which are not you or not me, is they do things like this. Wow, I'm hearing about this brand new crypto or this brand new stock and it's going to the moon. And they hear about it right about here. And so what they do is they execute buys. And I'm gonna make these red. They're gonna buy right here. They're gonna buy right here. They're gonna buy right here, and they're gonna go in with as much money as they can right here at the top. And they're putting in their life savings, right? They drain their savings account, they drain their emergency fund, they put money on a credit card, and they just start buying. Then look what's about to happen. It goes down, 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 down. And guess what our buddies do? They say, oh no, the sky is falling. Oh, heck is breaking loose, right? And so what they do is right about here, they sell. Remember, if they sell right here, they purchased up here in this zone. So that means they are losing money. It's dead. It's a scam. Have you ever heard these words before from people like this? And they get out. They get scared and they run away. But then the next hype comes. It's right about here, right? Your favorite stock is back on a run. Everything's looking good. And then they say, oh man, I'm gonna get back in it. And they start buying here. They just completely redo the same old dumb thing that they did prior. It starts falling way down here and they decide to sell. Maybe they'll sell here, and then they'll sell down here because they're like, okay, I need to completely cut my losses and get out of the bloody thing. Why are you doing that, people? Those people that are smart like you and I, here's what we look at. We look at the long term. We're looking at the news. We're doing some fundamental analysis. We're seeing if there's utility in the crypto or the stock that we're interested in. And here's what we then do. We say, okay, we're gonna use this purple color for us because I'm running out of colors here. But anyway, so you're gonna buy here, you're gonna buy here, you're gonna buy here, you're gonna buy here, you're gonna buy here. You're just gonna keep buying the thing because you trust and believe in whatever your favorite stock or crypto is. But you know, you just ride it up. And oh yeah, of course you're buying up here when your buddy the fool is also buying, right? But you're also buying as it goes down because you're like, oh man, discount. So if your average cost lies somewhere in this trend line, I'm gonna make it really fat so we can see what we're looking at. Here's the trend line, right? But look, if you bought in, your average price is probably going to fall somewhere in this yellow trend line, which means guess what? From this point to this point, you are up on your money. Your buddy that sold here and here, they're down $3,000, but because you just rode the wave and bought the highs, bought the lows and everything in between, you're still up on your money. You don't buy high and sell low. You buy low and you sell high. So if you're feeling a little bit nervous about the stock market, I'm going to pull up my iPad and we're going to walk through an example of why dollar cost averaging strategy can help you feel a little bit at ease, taking the other points that I mentioned earlier in mind. So we're going to go back to company A. And this time company A for this example is going for $10 a share. Now your goal is you found some budgetary cuts. Let's say for example, instead of going out to dinner every single month, you cut down one dinner and you decide you're going to invest $10 per month into the stock market into company A. And you're going to set it on autopilot, which means every single month you're going to take $10 and invest it into company A. So in the very first month that you do that, company A is going for $10 a share, which means because you put $10 in that month, you got one share of company A. And then in the second month, things go like pretty darn south. And all of a sudden it's now going for $5 a share. Now the nervous people get scared and they're like, oh my gosh, should I cut my losses and just sell? But you're smarter than that. You're gonna continue on investing and dollar cost averaging because you have your budget of $10 a month. So now that it's only going for $5 a share and you're still investing $10 a month, you're now gonna be able to pick up 2 more shares, which means your balance is now 3 shares. You take this plus this, you now have 3 shares of company A in your second month. Let's say in the third month, it goes up to about $8 a share. But because you're investing $10, you're actually going to receive a little bit more at 1.25 shares. And that's a fractional share because of course you're doing $10 on an $8 share price, which equals 1.25 shares. Which means out of this and this, your portfolio balance now has 4.25 shares of company A in the third month. Here comes the fourth month. In the fourth month, the share price goes back up to $10, all right? Which means you get, of course, 1 share, which means your portfolio balance with this and that equals 5.25 shares of company A. At the last month, at the 5th month, in this example, it goes up to $15 a share. So it's $15 a share on your final month here in this example. And because it's a little bit more now, you're not going to get, because you're only investing $10, you're not going to get as many shares as you typically would. You're going to get 0.66 shares because your $10 cannot afford at this moment an entire full share of company A, but that's okay. What we'll do is we'll add the 5.25 plus the 0.66 shares, which means your ending share price at the 5th month is 5.91 shares. But what is your dollar cost average price? Now, what I mentioned earlier is, of course, a lot of people like to sell right here at $5 because they freak out. Or they're going to sell at 15 because they think, oh, I made $5. Don't do that. Dollar cost average. Buy the dips. This is the dip. Right here's a dip. Right here's a dip. These are the dips. If you're doing your smart strategy of $10 a month no matter what, you're going to continue to just keep on going. There's a formula that you can use to figure out what your average price for this entire period is, okay? For your 5.91 shares, your average cost equals your invested amount divided by number of shares purchased. And so let's plug that in. So your total amount invested over this period of time would be $50. How I got that is because we're looking at 5 months here. You put $10 a month in, so that's $50 that you totally invested. That means your average cost equals $50 divided by the number of shares purchased. I'm going to hop back over here. The number of shares purchased again is 5.91 shares. Now let's do some math. $50 divided by 5.91 shares equals your average share price is $8.46. That is your dollar cost average. And that's why I think it's so important to consistently invest. That way you don't have to worry about timing the market. You don't have to worry about if it's up, down, sideways, or inside out. It doesn't matter at all. What matters is that you continue to invest. But check out what's really cool about this. Your $8.46 means that as long as the share price of your current invested amount is above $8.46, that means you have profit in your portfolio. And even though you had some shares that you bought at $10 or $15 or whatever the share price would be, your average cost is what matters. That's why I get more insane in the stock market when it crashes. $10 a day, that roughly gives us about $304 a month. So each day we're gonna take out our $10 and maybe put that into a temporary account. We're gonna build it up to $304. And then what you wanna do is take that $304 and every month continue to invest it in the stock market. So if we look at the S&P 500 growth and we look at the average over the last 60 years plus, we see about a 10% average per year. This is how it's gonna calculate. We're gonna take our $304 a month into our first investment. Then at the end of every month, we're going to put in our next $304. We're going to do this consistently every month for the next 35 years at an average rate of return in the stock market of 10%. We're going to hit calculate and boom, $1,164,100. And all it took was $10 per day. Now some of you are going to say, Bob, 35 years is so long. Okay, that's fine. What's your timeline to $1 million? You want it in 20 years instead of 35? Do you want it in 10 years instead of 35? All these things are gonna matter. That's gonna take more than just $10 per day. So let's say we wanna be a millionaire in 10 years. I'm gonna go back to the calculator. Let's reset this to 10 years. Ouch, look at that. That same $10 per day only gives us a $63,000 portfolio. Remember, in 35 years, it gives us $1 million. In 10 years, it only gives us $63,000. That's the power of compound interest. Not all is lost. What we need to do is figure out how much money we need to invest to reach the goal. So that $10 per day becomes, brace yourself, get ready, $164.38 every single day. So that actually adds up, not to $304 a month, but $5,000 a month. But if you really want to hustle it up, you want to become a millionaire, you cut your expenses, you increase your income, and you make it happen. Was this video helpful? Subscribe for more, check out this video next, and we'll see you on the next video.